Hi, Eric. So Eric Sibbitt is on. He's going to be the moderator for this next panel. And let me just introduce Eric, and then you can introduce the panel. Eric is my former partner at O'Melveny, a specialist in crypto and fintech matters, sitting in San Francisco. He will moderate this panel of excellent speakers on DeFi. So I'll let you take over at this point, Eric. Thank you.
Great. Thanks, Howard. Excited to be here. Great panelist. So I want to start just by providing a brief introduction to our panelists here. First, I'll start with Omid Malekan, associate in business at Columbia Business School, works as a consultant for startups, Fortune 100 companies, and I think I'll have some interesting perspectives here. Also the author of The Story of Blockchain, A Beginner's Guide to the Technology That Nobody Understands. So hopefully there are a few things that he'll be able to explain for us. We also have Terry Culver. Terry is the Chief Executive Officer at Digital Finance Group, and I think I'll have a very interesting perspective on, from an investor's perspective in the space. And of course, I think a few of you have heard who Brian Brooks is here. So his fame precedes him, and he's obviously deep from both the regulator side, from the kind of traditional financial institution side, and to the kind of cutting edge on the crypto side. And so maybe I'll just provide 1 minute if each of the panelists want to provide a deeper introduction to themselves and what your particular connection or interest in DeFi is, and then we can jump into some questions. Maybe I'll start with Omid.
Thanks, Eric. Hi, everybody. I agree with Brian that DeFi is the ultimate manifestation of the journey that Bitcoin set out on 12 years ago. And from my vantage point, since I've worked with both crypto startups and traditional financial companies, and I have to figure out how to teach this subject to my students, what DeFi represents in the long run is an opportunity to re-architect the financial system around some of the values that Brian pointed out everyone considers to be important, like transparency and reducing fraud and more broad access.
Great. Terry, you want to provide a minute of your background and connection to DeFi? I think you're on mute.
Sorry about that. My background is primarily as a policy advisor on technology and economic issues in emerging markets and developing countries. I worked for the UN for a long time, worked for several governments directly, and I come to blockchain not as a developer, but really as someone looking to develop that technology for financial inclusion. And that's where I see DeFi as being able to make a significant difference. I think it has a long way to go, right? It's still in its early stages, but the promise is there. And especially in markets where large percentage of the population is either operating in the informal economy or outside of the economy altogether. And that's where I think something like DeFi can provide a lot of economic and social value.
Great. Brian, anything else you would add on your background?
God help me, no. Thank you.
Okay, great. So I want to start, maybe I'll start with Omid, and obviously Brian provided a kind of a snapshot in his perspective on things. Maybe you could dig in a little bit. What do you agree with? What do you disagree with? And sort of how he has set the stage.
I think I agree with his basic framing of what DeFi is and why in some ways it could represent a better financial system. Also, I happen to really love his analogy to the self-driving car and the self-driving bank. I don't know if this is a disagreement or not, but I actually think the irony, if you look at the state of DeFi today, is that what it needs to grow is CeFi, in the sense that if you go into some of the most popular DeFi protocols right now, you'll see that things like fiat-backed stablecoins like Tether and USDC are fundamental, right? Even wrapped Bitcoin, which is really more of a CeFi solution than a DeFi one, because you send your Bitcoin to a custodian that's a corporation at BitGo, and they issue you a claim on the Ethereum blockchain. And I know that like the folks at the MakerDAO Foundation are working on integrating off-chain lending as a source of collateral, like actually giving loans to things like construction projects, to source more collateral to issue DAI. So I think what's going to be interesting in the coming years is that as the developers continue to improve these protocols, we're also going to see more and more bridges built to the traditional financial system. And that's what will really allow DeFi to scale. So I can envision a future that if someone, say, some existing financial company was to take it upon itself to issue tokenized treasuries into the DeFi ecosystem, and we already have tokenized dollars in the DeFi ecosystem, so now we can have a DeFi repo market, which would probably be a lot better than the existing repo market. So on a long enough timeline, I think Brian is right that these protocols will do a lot of what traditional financial entities do today. But in the intermediate term, I think this convergence thesis is where the action is going to be.
Great. And then maybe Terry, when you look at sort of the DeFi ecosystem and the different pieces and components, where do you see the value, right? From an investor's perspective and kind of looking at what are the pieces where you see the most value? And the thing I'm really interested in is, a lot of DeFi protocols, for example, you'll have, say, a governance protocol, a governance token, right? And it will work within a certain ecosystem. And sometimes that token is really just a way of voting and participating in the ecosystem. Sometimes it's actually used through the smart contract, et cetera. When you look at these different projects, where do you see the value and sort of, kind of help explain for someone maybe who's less familiar with governance protocols and decentralized autonomous organizations, et cetera, where's the value?
We look at the value really in two places. One, DeFi has done something that most blockchain applications have not yet done, which is have adoption. Again, it's still very early, but it's immediately filling a social and economic need in the market in a way that other applications have not. And so, for us, that's a fundamental shift and just a really basic signal that we're going to follow. The second thing that we see is enormous amounts of innovation taking place within the DeFi sector. You have specialization, you have diversification, and innovation taking place at different levels. So certainly when it comes to governance, you look at what MakerDAO has done in regards to governance principles and practices. They're really breaking new ground there about how you manage a decentralized community in a way that doesn't end up with centralized governance, a very hard thing to achieve. And also there's technical innovation. You look at a project like Akala, which is developing, an EVM compatible parachain so that you can have DeFi applications that are interoperable between Ethereum and Polkadot. And from our point of view, projects like that are really going to open up the doors for using these systems in ways with far fewer barriers and much less friction.
Great. Brian, maybe I want to put some of this in a historical context, given your kind of role as a regulator and your kind of broad perspective on the industry. And I kind of start going back to Alexander Hamilton, right? So, you had the colonial era, you had, multiple currencies, Spanish dollars and sort of beaver skins and tobacco, et cetera, right? And then you start off with, you kind of put into place a national bank, right? You create the mint, you establish the US dollar as sort of the unit of account, right? Now, fast forward to the current time, right? And all of a sudden we have, again, a kind of a proliferation of currencies, a proliferation of intermediaries and a decentralization. How do you see kind of things evolving? If we're looking, say, given that history, right, we're kind of decentralizing after a period of centralization, so to speak. And where do you see, like, say, not too far in the future, maybe 2030, what the financial landscape looks like in terms of financial intermediaries, the role of DeFi, et cetera?
So I guess, Eric, this is not the time for me to say that on current course and speed by 2030, the US dollar will be valueless and we better all be in Bitcoin. Probably not the time to make that comment. Just kidding, everyone. Here's what I would say. I think actually, and I think the historical question is a great one. I think that people's psychological relationship with money is very, very ahistorical. And so what I do when I'm talking to people about crypto is I ask them to kind of cast their mind back to what we call the free banking era, which was a period of time basically between the end of the Second Bank of the United States and you could argue the National Currency Act, which established my old agency, or you could argue the Federal Reserve Act. But there was a period of time there where, yes, there was a thing called the US dollar, and that was the unit of account. But not all US dollars were the same, right? Because what dollars really were they were debt claims on issuing banks, the value of which had a lot to do with the strength of that bank, right? So what happened was that national banks in those days were required to hold a certain amount of treasury securities against notes that they would issue to people, not unlike Tether, right? Where Tether was required to have a certain amount of things in the bank that were denominated in dollars, and then they could issue Tether tokens out there. But the value of Tether relative to the value of USDC or other stable coins depends a lot on what was really underlying all of that. And so for that whole period of time, you might have in your bank $3 drawn on the Second National Bank of Ypsilanti, and I might have in my pocket a $7 note from the First National Bank of Denver. And if we traveled anywhere else, it was not 100% clear that that bank note, even though it was dollars, right, would be accepted by somebody, because they may not know the bank, they may not believe it was strong, they just may not take it. Much as, at least within our lifetime, you might remember that American Express travelers checks were more widely accepted than other travelers checks, even though they were all denominated in dollars. So I think the mistake is believing that just because there's a thing that we call the dollar, and we say that dollars are the unit of account in the sense that they're a denomination, it's in assuming that all dollars are the same as all other dollars. And if you think back to that era, it becomes a little bit more comprehensible how it can be that we have a whole bunch of different crypto tokens that all have different values and all have different adoptions for different kinds of things. Now, it's not a perfect analogy because, as most people in this room know, despite the name, cryptocurrencies are generally speaking not necessarily intended as currencies in the sense that you mean it. I mean, they're tokens that have a value that are inducing people to participate in a network, but that's not the same as saying that you use them to buy stuff. But still, if you think back to the free banking era, I think that's the easiest way to understand it is a dollar from this bank is not the same as a dollar from that bank. This could explain why we have multiple different stablecoin projects going on, even though they purport to all be denominated in dollars. I mean, what causes somebody to buy USDC and causes somebody else to buy Tether? Who can say?
Great. So Omid, give me a prediction for 2030. I mean, you're kind of in the room sometimes advising both startups and call them more traditional institutions as they're looking at institutional adoption of blockchain. I'm kind of curious on your perspective how you see things changing by then.
I do think that a shocking amount of financial intermediation will happen on some kind of a blockchain network. And I think one of the reasons it'll happen is actually regulators will start to mandate it, like for all the reasons that Brian pointed out earlier, like to the extent that the point of financial regulation is to protect the end user and the integrity of the financial system, then a more automated, predictable, and fully transparent financial system like you get in DeFi serves all of those goals. And financial inclusion is increasingly becoming a political concern. I don't know how much banking regulators care about it, but people in Congress, for example, do. So I think at a certain point, governments will flip and start saying that actually we want to see more of the financial system resemble what we see today as stable coins and MakerDAO. What I'm not sure of is which networks will that take place on, because a big variable will be, will we also start to see central bank digital currencies? Because in a world where if you have tokenized euros, dollars, renminbi, whatever, you can now build the current DeFi infrastructure without having to worry about like, are tethers fully backed or not, right? You just integrate central bank money directly into it.
Great. So, and maybe this is quite, maybe, for all the panelists, but maybe Terry, if you want to start, what do you see as the kind of primary impediments, and this could include regulation as well as other things, to kind of greater adoption, proliferation, acceptance of DeFi? And I'm also mindful of kind of somewhat analogous, right? There's been a lot of controversy right now with Wall Street bets and GameStop and kind of this group of decentralized investors empowered by trading apps, et cetera. and how sort of Congress has reacted to that, both in kind of the more institutional and the consumer protection side. I'm curious, what do you see as the primary things that need to be solved in order for things to proliferate?
I think one big hurdle that needs to be addressed is the user experience. Trying to use a DeFi platform is not for the faint of heart for someone who's not already familiar with crypto. And on top of that, you have all kinds of security issues, right? So it's difficult to use generally, and it's high risk. That I think will be solved, but it needs to be in order for it to really start to get even wider adoption. I think DeFi needs to evolve to a point where it's actually providing financial inclusion. I would be hard pressed to say that while it has the potential to do that, it's currently doing that. To me, it seems at the moment that it's primarily speculative investment. And that's interesting and great, but that's not really where the promise of it lies. So will it over time evolve to fulfill that promise, or will it become a kind of derivative financial market within the crypto ecosystem? And then the last thing I would say is education. I don't think regulation on the whole is an impediment at all, but there is an awful lot of misunderstanding and misinformation about DeFi and crypto in general, among some regulators, among the corporate sector and the general public. So that level of education and awareness, I think, needs to increase in order for DeFi to really continue to grow.
Great. And I know, Brian, I mean, you mentioned some of this in your remarks, but I mean, as a regulator's perspective, right, used to regulating centralized intermediaries and institutions, right? How do regulators get their kind of hands around this, right? And part of this may be the education that Terry's talking about, and what is a kind of a rational way to be thinking about regulating this space, serving legitimate policy objectives, and then also encouraging growth in entrepreneurs?
Yeah, well, so I would say there are a couple of answers to that. I mean, one is I think historically the biggest problem in American financial regulation models is the idea that we exist to regulate entities rather than activities. And there are all kinds of reasons that's terrible. It's frankly one reason why the US's innovation posture is so much less successful and aggressive than other parts of the world. And what I mean by that is, the OCC exists to regulate banks. So you look at DeFi and you say, is that a bank? And you say, well, it's not a bank because it doesn't have the requisite number of incorporators, so it must not be a bank. So then who could regulate it? Well, maybe it's a broker dealer. Let's go see if the SEC can regulate it. It's not a broker dealer because it's not actually providing investment advice or doing certain other things broker dealers do. And the things it's trading aren't securities, so that doesn't work. Maybe it's a commission merchant, and the CFTC should know. So there's part of that issue, which is we need to start regulating activities. And regardless of whether the activity is conducted by a bank or a broker dealer or a software protocol, the activity is the thing that creates the risk and also creates the opportunity. And so that activity ought to be looked at in a way. This kind of regulation is done far better in other countries than we do it in our country. So if you take the UK, for example, which has a unified financial regulatory architecture under something called the Financial Conduct Authority, which regulates both banks and non-banks that are doing certain kinds of things, you don't have this sort of problem. But that's a challenge for us, I would say. And then the second thing is, I would agree with comments that both Terry and Omid made, I guess, which is, until we get to a point where you have a fully integrated crypto economic system, this is always going to look like it's speculative investment, and that's going to get a certain kind of regulatory approach, versus if there really were an economy that were built on crypto. And I think the missing piece, this is Ahmed's point from a moment ago, the missing piece is widespread adoptions of stable coins as the price stable transaction mechanism within the world of crypto. Right now, stable coins are radically gaining adoption. I mean, again, they're up, 500 or 600% versus where they were in market cap a year ago. But even so, they're nothing like Bitcoin at this point. Most people are still buying and selling Bitcoin for fun and profit. They're not using it as a wealth store inside of an economy where their unit of spending is also a crypto unit. So I think stable coins are the missing link there. When you have that, and this looks more like a normal financial system, it'll be a little bit easier to get our regulatory heads around.
Right. So one, yeah, I'm interested in hearing you sort of, maybe Omid, what's an interesting application or company you see in this space, and particularly maybe it's something that's not yet widely adopted yet, or what do you see as most interesting, one of the most interesting applications for DeFi? And I'd love to hear Terry and Brian's thoughts on that as well.
I think that the automated market maker design that was sort of pioneered by Uniswap and now has been replicated by a lot of these other DeFi protocols. But that to me is like a uniquely original idea. Right? There are other aspects of DeFi that you can say, well, it's just a more decentralized version of what we already see in the traditional financial system, right? Like there are credit facilities, there are money markets, there are investment pools that are like ETFs. But what's fascinating about the AMMs, and I've been talking to people about this and asking people about this, the idea of an automated market maker has been around in academic circles for a while, but no one really like figured out the execution of it. And Uniswap proved that not only did they execute it, but it's been radically successful, particularly if you look at the number of tail markets that some of these protocols have. Like I think Uniswap has something like close to 30,000 different trading pairs now, compared to like, Binance's 800 and Coinbase's 30 or something. So to people who are just interested in financial innovation and financial engineering, which could come from the crypto world or the traditional financial system, I think that's a model that's going to have a profound impact on how we trade assets with each other going forward.
Great. Terry, I know you mentioned a couple of projects, but anything that you see as a particularly interesting application or something that maybe hasn't quite emerged yet, but you can see showing tremendous growth and resonance.
To me, the most striking thing about DeFi is the application of permissionlessness, and I think that's probably one of the most fragile things about blockchain. That risks becoming diluted or going away entirely as the space evolves. And the DeFi sector has managed to remain permissionless and even expand it. And so the most interesting platforms that I see developing, Akala, Maker, others, are really, protecting the permissionless nature of what they're building over time. And so that's what I would continue to pay attention to.
So just on that. So, one of the things I wonder about, right, because all this decentralized protocol, decentralized governance, right? And sometimes when you look at some of the statistics, the percentage that's actually participating in governance is not as high as you might expect. How do you see that shaking out at time, right? Because like a decentralized world depends on decentralized involvement. Do you see some balance there, or do you see kind of larger players starting to monopolize governments, or how do you see that kind of evolving?
I think it's going to have to continue to evolve. I think communities in general tend to centralize over time, and blockchain communities are no different. If you look at a platform like Gitcoin, which has deployed quadratic voting in its grants in order to prevent undue influence from large contributors, I think there's some really interesting applications in the DeFi sector for that kind of system. I think there's other models, the MakerDAO model, when it comes to how you give voice to various parts of the community, provide some interesting things that could be adopted in a more widespread way. I think the challenge will be maintaining high levels of participation over time. Like local community government, you tend to have a certain level of participation, but only on really controversial issues do you see much wider participation. I think DeFi is going to experience a similar kind of phenomenon.
Great. Brian, what's your favorite application for DeFi?
Well, I mean, from the where you stand is based on where you sit, sort of universe. I've always thought that consumer lending is one of the great applications of DeFi. We haven't seen that at scale yet, but you know, I come back to my peer-to-peer comment earlier, which is that you know, the reason that we don't have financial inclusion in this country, the reason that it's hard for certain people to get loans, et cetera, is because, you know, loans are based on the size of a bank balance sheet. Banks are first and foremost willing to lend to their most profitable customers with the least risk. And only at the very end, in certain parts of the cycle, if there's any balance sheet left over, will they start investing in loans for poor people or loans for, you know, risky ventures or whatever. That's why, you know, unfortunately, you get bubbles, right? As in periods of high growth, you'll get subprime lending at the very top, which then leads to bad things. But with DeFi and the ability to connect people directly without an intermediary source of liquidity, in other words, I could choose to directly invest in your loan without somebody else pooling it in the middle of that. Because of a DeFi protocol, you don't need a balance sheet. What you just need is a large number of participants in the marketplace, which you can easily get in a network effect. And so to me, you solve a lot of problems of financial inclusion and of growth if you have real lending marketplaces that are truly peer-to-peer as opposed to based on intermediaries.
Great, and I see we had a couple of questions in the chat. You know, and one question was actually directed to you, Brian. What are your thoughts on central bank digital currencies? And I may tack on to that just sort of DeFi and systemic risk, but maybe that's overly ambitious, but interested to know your thoughts on that.
Yeah, I mean, the comment I always make about central bank digital currencies is, you know, that feels like a more of a command and control economic approach to economic policy than does its alternative. So it's no accident, for example, that the first country to really roll out at scale a CBDC is China, right? A completely state-managed economy. And we need to do something about that, but it's not clear to me why that needs to be a central bank digital currency. So what central bank digital currencies are fundamentally about is faster payment and sort of payment processing and settlement speeds relative to traditional you know, settlement mechanisms. And we already have a format for real-time payments in this country. That's what stablecoins are, is they are instantaneously transacting on blockchains. So I'm not sure why we want the government in this country to build one token for the dollar when we have lots of different kinds of tokens for the dollar that have different functionalities depending on what user preferences are. The analogy I often give is the analogy to the communications apps on your cell phone, where we don't have the FCC build your communication app so you have one government sanctioned app. Instead, you know, we all have 5 or 6 of them, right? We've got WhatsApp and Messenger, Signal, Telegram, maybe SMS, text messages, and everything else, because innovators built that with a profit motive. And it turns out that each one of those is a little bit different and offers us different value. Why wouldn't we want that as we migrate to internet money, right? We certainly wanted that with internet information services. Why don't we want the same choice and variety with internet money?
Great. I think we're coming close to time. I just maybe Omid, any quick last thoughts or comments you want to kind of share with the group?
Since we stumbled into CBDCs, the pro and the con of it is the pro of CBDCs is that historically people have had access to a combination of central bank money and commercial bank money, right? Like you had $20 bills in your wallet and then you had a bank account. Digitization has upset that balance. Like we increasingly don't have $20 bills in our wallet. So you could argue CBDCs could be good because they reestablish that. The downside of it is Brian's right about the command and control fears of it. But having listened to Chairman Powell's testimony to Congress earlier today, I think that's exactly what the world central bankers want. So they are coming, unfortunately.
Great. And maybe I'll get Terry, any last words to share with the audience before I turn it back over to Howard?
Yeah, DeFi is just in its very early stages. I think the next year is going to see enormous amounts of innovation. So keep watching the space.
Great. Well, I'd like to thank all our panelists and Howard, I'll turn it back to you.
Great. This has been a terrific discussion. And I think everybody's taken away lots to think about from this. Thank you, panelists. Thank you, Eric. Thank you, everybody, for contributing.